Good morning, folks. My name is Rich Harding, Rail Logistics Coordinator here at PFL. We hope that everyone had a great weekend. The Dow closed lower on Friday of last week, down 46 points to close out the week at 31,338, up 240 points week over week. The S&P 500 closed lower on Friday of last week, down 3.24 points, and closed out the week at 3899.38, up 74.05 points week over week. The Nasdaq closed higher on Friday of last week, up 13.96 points, and closed the week at 11,635 points, up 507 points week over week. In overnight trading, Dow futures traded lower and are expected to open down this morning at minus 158 points. Recession fears took hold of the oil markets last week, with both WTI and Brent briefly slipping at 1 point below $100 a barrel. Since then, Brent has rebounded above the three-digit threshold, while WTI is yet to recover. This has given rise to hopes that gasoline prices could also slip further after the national average inched down from an all-time high of more than $5 per gallon. It appears, however, that there is little hope for a significant decline at the pump. A tweet by President Biden on July 4th became viral for calling on fuel station owners to lower prices. Quote, "My message to the companies running gas stations and setting prices at the pump is simple. This is a time of war and global peril," Biden wrote. "Bring down the price you are charging at the pump to reflect the cost you're paying for the product. And do it now," said Biden. The responses that this tweet garnered were not all positive, with some telling Biden that this is not how the retail fuel industry works. Others noting that fuel station owners do not make the enormous sum of money Biden had suggested. Even Amazon's Jeff Bezos lashed out at the president, effectively accusing him of either deliberately misdirecting attention or demonstrating a, quote, deep misunderstanding of basic market dynamics. The exchange of tweets, which continued with White House Press Secretary Karine Jean-Pierre claiming oil prices had fallen by $15 over June, that was a blip in time, and they picked their moment. West Texas Intermediate Crude, WTI, settled at $104.79 a barrel, gaining $2.06 a barrel on Friday of last week, down $2.27 a barrel week over week. U.S. commercial crude inventories increased by 8.2 million barrels week over week. U.S. crude oil inventories are 10% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 2.5 million barrels week over week and are 8% below the 5-year average for this time of year. Distillate fuel inventories decreased by 1.3 million barrels week over week and are about 20% below the 5-year average for this time of year. Propane and propylene inventories increased by 900,000 barrels week over week and are 16% below the 5-year average for this time of year. Propane closed out the week at $1.22 a gallon, up 2 cents per gallon week over week, and up 15 cents per gallon year over year. Oil is higher in overnight trading, and WTI is poised to open up 2.42 cents a barrel from Friday's close. Total North American weekly rail volumes were down 3.6% in week 27 compared with the same week last year. And 6 of the 11 AAR's major traffic categories posted year-over-year declines, with the largest decreases coming from grain, which was down 14.2%, and other was down 5.8%. The largest increase was from coal, which was up 4.7%, and non-metallic minerals, which was up 4.5%. North American rig count was up 11 rigs week over week. U.S. rig count was up 2 rigs week over week and up by 273 rigs year over year. The U.S. currently has 752 active rigs. Canada's rig count was up by 9 rigs week over week and up by 38 rigs year over year. Canada's overall rig count is 175 active rigs. Overall, year over year, we are up 311 rigs collectively. Folks, we are watching a bunch of key economic indicators, including PMI, industrial output, and capacity utilization unemployment numbers. Please see PFL's Rail Report for further details. The reading of PFL's Rail Report today is an absolute must. Not only do we dive into more detail, as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers. Bottom line, a lot of great information, a lot of fancy graphs. We hope that you enjoy reading PFL's Rail Report today. We do it all for you, folks. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any question or concerns you may have at 239-390-2885.